Hello, trader. Welcome back to another weekly Forex podcast from Forex Trading Wizard Academy. Upcoming week is mainly focused for two very important events. One is FOMC meetings. Secondly, the monthly close, which is the technical. Now, first looking at DXY and gold chart, we can see the DXY from the 1 hour price action. This is significantly bearish market. And if we look at the gold, it is significantly bull market so far. Are you going to see further rise on gold and further drop on DXY? Now, if we look at the context of the FOMC coming up this week, as there will be new Fed chair and who are most likely to hold the rate cut in the future. So that means there are more rate cut comings this year. Though this January there isn't any schedule for rate cut, but as there will be new decision coming for the upcoming cut, there might be potentially further downside on DXY and potentially further upside on gold from the fundamental perspective. Now we will be looking at in this weekly forex forecast from the multiple time frame analysis to see that how the technical is coinciding with this fundamental or it is contradicting, and then we will be looking at potential levels where you can look for entry for this upcoming week, and also you'll be looking at the order blocks where the market potentially move and reverse. So before I progress with this weekly forex forecast traders, this is the last week of January 2026. So there is a monthly, weekly, and daily close will be at the end of the week. So there will be some increased move in the market. So that being said, before I progress, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. So that being said, let's begin with first of all DXY, starting with the higher time frame. Okay, data. So beginning with first of all bigger picture, looking at the monthly chart to see that overall direction in this market. Now, monthly price action that you can see DXY is a long-term bear market. If we look at the historical perspective, we can see that here is the monthly impulse of this key level, which is significantly bearish, and we see that in that drop on DXY, the market from the monthly has broken this key level of support which tested as a resistance, and we can see the market again rejecting of that level that could bring that market down further below. And as this market rejecting of this 10 exponential moving averages on the monthly, there is a crossover as well on the monthly time frame, that there is a potential for now DXY to break that low and to create potentially a new lower low as it is a downtrend. Therefore, from the monthly, we can expect further bearish directional move here in this market. Now, looking at the weekly chart to see how the market is eventually moving here. Now, from the weekly, we see that there is a significantly important head and shoulder. Now, overall trend here in this market is bearish, that we can see, and with a higher drop from this high level from this weekly time frame here, we can see that the market back to back 3 weeks bounce off this level, tested this order block which is the support and resistance, and this week there was a stronger drop. Now this is a quite eventful week, as you have seen that, and that has contributed also the DXY move. And as the market has entirely broken out of this support level, a long-term trend is now resuming for this downside here, and there is an imbalance here. If you look at, there is a doji from the weekly, the potential for this market to now to create a new lower low is higher. Now, looking at daily chart to see how the market structure is creating, we can see that from the monthly and weekly and daily, it is significantly bearish here. Now we see there is a head and shoulder formation with this green candle, narrow green candle, which was a narrow pullback of this breakup structure, and the market now maintaining its downtrend here in that market on DXY. And we could see the price eventually continue to drop here and to create a new lower low in this market. Therefore, there is a higher possibility for DXY to trend back down here. Now, looking at the intraday from the 4-hour chart here, that you can see there was a local uptrend here, with that uptrend form a double top here, and which also later form an head and shoulder from the 4-hour time frame. And with that head and shoulder formation, the market has entirely broken out of the structure, followed by a pullback, and it is now maintaining this downtrending market structure where the price is maintaining series of lower high and lower low, which is a long term now turning to a downtrend. So for any kind of trade entry based on the XY, you will be looking at euro dollar, British pound, US dollar, AUD, USD, dollar, yen, all of them potentially to follow the DXY as the price moved in those instruments mainly by DXY. So here is what we can see uh, in that zone as 4-hour time frame. There is a significant drop. If we look at the health of this intraday candlestick pattern, we can see that in that intraday price section, which is strongly bearish, a full body candle close with a healthy body maintaining this downtrend. What I think that as there will be a new weekly open, there might be a potential pullback here, and that pullback can and create significant liquidity sweep here on DXY. And I think the market eventually could continue to drop off this resistance line, which is a very important level of resistance, which is high liquidity zone. So therefore, if we look at the lower time frame from the 1 hour, this is what we're talking about in the beginning of this session here, that there was a stronger drop and there is no pullback here of this move. Now, if we look at the health of this red bearish candle, we can see that before this breakdown in this lower time frame, there was a significant pullback with multiple liquidity sweep here in that area. So this is where what I think with weekly open there might be initial pullback, and that's a very important zone that we could see the market to potentially react back again, and even we could see gap open retesting that level and continue to drop. Therefore, DXY showing that significantly downtrending market is taken from the technical and fundamental perspective. So this is the zone that we can look for potentially with the weekly open at 97.60 to 97.70. This is the level that could be a sell-off level for DXY this week with market open. Now, based on that, if you look at the euro dollar, if you guys looked at that with on Friday, we had also a position open here, and we just within a short period of time closed the trade. The market also went exactly in the direction that we expected, and we closed the trade. This is still moving in that direction. Now, this is what is, if you look at in that area where the market gain momentum again for another stronger breakout here in this market. Now, looking at first of all a monthly chart to see that where the price is heading on euro dollar, we can see that as like the DXY, we see that euro dollar has a little added advantage on crossing the previous monthly low and bounce off the monthly high. So crossing the previous monthly low has given significant amount of liquidity as the price moves from liquidity to liquidity. As it tested that liquidity zone, there is a high potential for the market to break that high and potentially to create a new higher high. So monthly close could go up to potentially to create a new high, as also you see that DXY just showing the other direction. So if we look at the weekly price action on euro dollar. We can see that from the weekly, this is the weekly bullish engulfer, and this weekly candlestick pattern has quite a few significantly important confluence. It has crossed the 10 and 20 EMA and entirely closed back below the full body candle close, and it's a bullish engulfer which has engulfed almost quite a few red candle in a row, including this narrow green candle. So this kind of candle close shows a higher bullish confluence and potentially further move to the upside. So there is a potential for the market on euro dollar initially to break this nearly to 100 pip even higher in the beginning of the trading week. Now, if we look at the daily chart, here is the inverted head and shoulder, which is the mirror of DXY, that you can see the price has just crossed over from 10 and 20 EMA on the daily time frame, which is showing that euro dollar is maintaining this uptrending market structure. So looking at the 4-hour chart from the intraday, we can see that this market also showing bullish confluence here. There is a break of support. Okay, if you look at, and with that breakup support, there is a liquidity sweep. The market has broken back to the upside. Here it formed this inverted head and shoulder, stronger breakout pullback, and the market is maintaining this uptrending market structure, which is eventually could break out and create a new higher high in that area. So if we look at the 1-hour price action to see how the market is eventually evolving, that we can see there's a crossover also the 10 and 20 EMA pull back to this 20 EMA on the 1-hour. The price tested this support here, and off this support level, creating this order block on the 1-hour, the market had a breakout. So this is the current order block on the 1-hour chart on euro dollar with a narrow doji. The market again bounce off that level. There might be an initial pullback, and that could retest this support and then to return again back to the upside to the major direction of the trend. That could be the potential wave on euro dollar. As we are just looking at the mirror of DXY, any pullback and rejection can give a potential buying opportunity on euro dollar, and potential level that you can look at 1.1799 or 1.80 level is an important area of value for potential buyers on euro dollar. Now, looking at British pound US dollar, so we can see that almost similar kind of price action has formed on British pound US dollar. And if you look at the monthly week, so looking at monthly here also, British pound US dollar has formed bullish monthly price action, while euro dollar we can see cross the monthly low and bounce off that level. British pound US dollar tested the 10 EMA and then closed above with a bullish engulfer on the monthly time frame on British pound US dollar, which is showing that the market may eventually go ahead and create a new higher high. So if we look at the weekly chart also, in the similar way like the euro dollar, there's a bullish engulfer has crossed this narrow doji, entirely engulf on both direction, given a high possibility for British pound US dollar to potentially create a new higher high in this market. Now looking at daily, here is the daily price action where there is a gap open. The prices cross both 10 and 20 EMA, which is a bullish engulfer, and which has given a higher possibility for this market eventually to go ahead and create a new higher high here on British pound US dollar. So all three time frame aligning for this potential bullish breakout here on British pound US dollar. Now if we look at the 4-hour chart here to see that how the market is eventually evolving here from the intraday time frame, here is the 4-hour bullish engulfer with a narrower candlestick pattern formation here on British pound US dollar, showing that the market eventually could go ahead and create a new higher high in this market. So looking at the 1 hour again, this lower time frame, if we look at multiple times, it becomes much more easier to understand. Now we can see that this is the 1 hour impulse with a narrow doji, and the market already has broken out of this resistance line, and this is the zone that you can look for potential bullish entry on British pound US dollar. As soon as you will find suitable entry, you're looking to go long on GBPUSD with a high probability trade setup. Now looking at AUDUSD. Now if you look at AUDUSD was significantly bullish. In fact, uh, in all USD we saw that AUDUSD was highly bullish due to fundamental data that came out last week and week before. So that has given a significant strength on this instrument. And now AUDUSD, if you look at the a monthly price section here, that you can see this is the monthly bullish engulfer, which is significantly bullish here on the monthly on AUDUSD has given a significant bullish price action, which is giving that AUDUSD may further bounce off this level here. Now if we look at the weekly chart, that you can see there is a weekly bullish engulfer, which is back to back 3 weeks of doji formation has given this market further upside here. Now this bullish engulfer on AUDUSD was large, and if you look at this whole move, this is the largest candle, which is there has been significant uh, buying pressure in that area of this 10 exponential moving averages. So there is a high potential for now AUDUSD potentially cross this high and to create a new higher high in this market. Therefore AUDUSD could eventually bounce back above from the daily as well. You can see there is a stronger bullish impulse here, where we can expect the market to pull back and then to give another entry opportunity. Here is, if we look at the 1 hour chart here, that you can see the market is also showing the same pattern at British pound US dollar and euro dollar. So this is the level. As AUDUSD is highly bullish, we could see potentially narrower pullback with market open can give with a stronger rejection. We can look for potential buying opportunity here on this market. So the potential buy level on AUDUSD after a false breakout at 0.6885 level, that you can look at entry opportunity. Now looking at XAUUSD, gold was if you guys looked at the past week, was highly volatile, and it's in fact currently in a very strong trend. So let's look at again the multiple time frame analysis to see where it is heading. Now looking at the gold chart here, we can see that this is a completely non-linear bullish trend. So if you look at it, the market was in a curved bullish trend, which is eventually bouncing off that level. Now from the higher time frame, if you look at that the price action were in relation to the both 10 and 20 EMA, so slow EMA and the fast EMA, the market is well above this level. This is the one confluence that this market had a high buying pressure. And if we look at, this is the third week of the month has closed, and there's only one more week, and this monthly price action, that you can see there is no sign of break below. Therefore from the monthly, as long-term trend is bullish of this level, it's breaking to the upside. There's a potential for upside here on the monthly on XAUUSD. Now looking at weekly, we are looking at now detailed picture, which is giving us more in-depth understanding of the possible level that we can look for entry this week. So from the weekly, first of all, this is the current weekly price action, which is significant bullish move. There is a double bottom here, and with that double bottom, the market has entirely broken out of that level. So this is a move, pullback, another move, pullback, another move. Now we could see pullback or potentially another bounce back to the upside here in this market. So what I think, if you look at it, this is not a closed candle. Therefore it is still there is a higher possibility for the growth to the upside in this market. So if we look at the monthly, it's not a close. From the weekly, this candle is ending here, and with the new weekly open that you can see in this upcoming week, this is the last week of the month, So from the weekly long term picture, if we look at, as this is a full body candle close, that means it has a volume in it, and where this weekly price action has started its move that you can see of this previous resistance stance support. So that means in the beginning of the week there is a higher possibility for another bounce back to the upside even before the pullback. So therefore, looking at the daily chart now, daily price action, last Friday's candle, this one, and this week, the whole 5 days, the market was in a bullish trend. So with this bullish trend of this 5 days back to back, created series of higher high and higher low. Now this is the daily price action, as the market is maintaining series of higher low on the daily. Therefore those higher low, that means daily support, is a high confluence for the buyers here now at the moment. So if you look at the intraday here, and from the 4 hour also we can see strong trend confluence. Now the more the trend is becoming bigger, there is a shorter pullback that we can see. If we look at here, there was quite a few sessions of pullback, and the market has broken out of that level, and we can see there is a deeper pullback later, followed by again narrower pullback. So the narrower pullback is signaling that there is a higher confluence from the buyers. So looking at the intraday price section here, if you look at our previous live session as well, here is the this is the lower time frame price action from the 1 hour, and this is 1 hour order block that you can see here. So if you look at this order block is quite significant, as so order block. Now marking that order block will give us a better understanding of where the market currently in relation to that order block. So with this order block, the market is, if you look at, this is a 1 hour trend, and in this whole move except this order block, we see that there is no significant breakup structure. That means whenever the market is coming lower, the buyers is buying. So as there are a lot of buying pressure, that means that the buyers order the market, any breakup structure can be, in the first instant we can look for going long on gold in this upcoming week. So here is what we are looking at in this market. This is the current key level of support. We might see the market to come back here, and in the beginning, as the market is still not open, we are not sure whether there is a gap open or no, but I think there is a potential for a lower time frame breakup structure. If the market breaks back to 4958 level, we can look at to buy back to 5000 level. So this is higher confluence, as the market is nearly there. There's another possibility can happen, is that XAUUSD may eventually break back to the upside above the 5000 retest of this psychological level, and then could continue to rise back here to create a new higher high in this market. So these are some of the levels as well as the possibilities that I'm looking at with all the members in the academy for this week in the beginning for trading. And once the progress happen along with the FOMC meetings, we might see that the market to continue its trend. So whenever there is a breakup structure to those key levels, we are looking to go long on XAU USD. Now, if we look at the dollar yen, as with the DXY, also we can see the dollar yen currently in a bullish market, but we have seen there is a significant breakup structure. There was a, as you know, the yen is inherently weaker due to the BOJ policy. Currently, this week we saw there was a opposite picture. There is a rejection of that key level. So what I think that this move may not be a permanently a change of trend, as JPY is always weaker with DXO, except some of the time when the market was in a deeper pullback. But historically, it is a bull market. So therefore, this market I always look for buying opportunity when there is a the market is breaking off that level. So from the daily, we can see last day of trading week there's a huge daily bearish candlestick pattern which has closed entirely back below. Now this is a support level on the daily that expecting that dollar yen to break and then to eventually return again back above to create a new higher high in this market. So looking at the 4-hour chart here on USDJPY, looking at this market to break below, retest, and then to return again back above here. So from the 4-hour chart here, this is a significantly downtrending market structure on dollar yen, and in the downtrend you're looking at a pullback, and with a pullback we will be looking at selling opportunity here in this market. So this could be the lower time frame selling opportunity here, and as the market trend is long term bullish, breaking any of these key support level can give buying opportunity here in this market. As DXY, that means dollar index, is so far bearish. If yen become further weaker, we might see that DXY going dollar yen going up, or we might see in a sideways movement. So far as dollar showing weakness in that area, we might see sell off with market open. Later, based on the price action, we can look for further entry. At the moment, here is downside, and we could see the market to break this key support level. Now, looking at BTC USD, we can see that this market this month in the first 3 weeks quite a few up and down, and BTC USD after this monthly drop to this support level, we can see that there is a stronger bounce with a series of higher low in this monthly price action that can lead that market back up here to create a new higher high. If you look at the weekly price action here on BTC USD, you can see that from the weekly, where weekly series of higher low, and we have seen this is a uptrending market structure. The market was maintaining this series of higher low, and with this series of higher low, as the price has broken back below, you could see the market to eventually bounce off this level again. As with this breakup structure, the market may trend again to the upside in this market. Looking at daily price action here, this is the daily move from this level to this level, and with the daily drop, there is entirely a complete breakup structure here in this market, and that breakup structure has given BTC USD further bullish momentum, and we could see what I think after initial pullback in this market to bounce back to the upside. So this could be the potential wave on BTC USD this week, and I will also be posting few updates throughout the week. Guys and girls, make sure you stay connected by joining also the Telegram. You can find link below this video. That being said, thank you for joining. I'll see you again with further update if there is any update with market open or before the market open with any other instrument.